Hey, are you thinking about investing your money into the stock market as a first timer? Then this is the right video for you. Today in this episode, I will show you 5 easy steps for you to follow to invest your first dollar. So before making today's episode, I also watched a few other similar videos about stock trading for beginners. Those videos were great, but I find the information in many of those videos are either a little too advanced for beginners or a little off topic. So I really want to make this video to clean up the information that beginners should know and to help those who are very eager to start but have no idea where to even begin. I made a separate video for basic stock trading terminologies, so feel free to go check it out. With that video and the one you're watching right now, I think you'll be ready to start investing. So make sure you stay to the very end of this video to avoid missing any information. With that said, let's get this video rolling. If this is your first time watching a video from this channel, then please consider subscribing as I go through weekly topics ranging from personal finance, investment to well-being, and you don't want to miss out on any of those. Alright, let's start with the first step, and that is to review your current financial situation. It may sound obvious, but consider this. If you're living paycheck to paycheck, then you really shouldn't be looking at stock trading or any long-term investment at the moment. Your number one priority is to clean up your spending first and actually be able to save money regularly. But just because you have some money left over every month doesn't mean you should invest all of them right away. You should have also set up an emergency fund that is roughly 3 to 6 times your monthly expenses. This emergency fund should be readily available to you at any given time. But if you really want to invest with your emergency fund, then at least invest into something that is relatively stable, which I will talk about more later. But if you think you're financially comfortable, relatively speaking, then your second step is to ask why you want to invest into the stock market. What is your purpose of your investment? Are you investing to save for the long term? Or are you investing to get regular payments from your investments? Or are you just playing around? All these answers deserve to have their own individual videos in the future, but I'll touch on them briefly. If you are saving for the long term, then you really need to diversify your investments, meaning not putting all the eggs in one basket. You will need to have a mix of stable companies as well as growing companies, so this way your risk will be minimized. Now, if you're looking to get regular payments from your investments, then your portfolio will be heavily reliant on high dividend stocks and even bonds. It may sound like a good idea to get dividends and interest payments from your investments regularly, but you may be losing out on the growth opportunity in the stock market. And also, high dividend stocks may also mean that these companies are in distress. And lastly, if you just want to play around in the stock market because you have heard from someone somewhere that this particular company or startup is a rare investment opportunity, that is fine too. We have all seen many startup companies grow exponentially, but remember this, huge growth also means big risk. So if you just want to play around with the spare cash you have, then go for it. It's pretty fun. It's like gambling at a casino. But if your life is depending on this amount of money that you have, then taking such a huge risk is definitely not recommended. But that doesn't mean that your investment portfolio can't have a small exposure to these crazy growing companies, as long as you don't put too many eggs in the same basket. Moving on to the third step, and that is to choose your trading platform or stockbroker. And there are 3 main types of options out there. The first type of option is through banks. Your bank can most likely help you set up your investment account and be your stockbroker at the same time. Pretty convenient, but they do charge you quite a bit. Another similar option is to set up your investment account with independent stockbroker companies. They usually charge less than banks and can often allow you to access to more features and more markets. And the last option is also the most popular among tech-savvy individuals. There are apps that are commission-free. Big names like Robinhood completely changed the trading platform, but apps like these are usually commission-free only when trading within the same country that you are in. But as beginners, trading in the stock market in your own country is the way to go, so you don't have to worry about currency fluctuation. In the US, that's Robinhood. In Canada, that's Wealthsimple. In Europe, that's Revolut. So find out which app or company allows you to trade low to no commission fee. Personally, I use commission-free app to do trading, so in the future, I will make a video to compare the major ones. So if you want the least hassle and would like to have a financial advisor to help you out in person, then go to the banks. But if you don't mind to be more hands-on and doing it yourself, then commission-free or low commission trading are the ways to go. Now let's move on to step number 4, and that is to do stock and market research. Let's make it simple here and get yourself familiarized first. Look at the top 20 stocks in your country. You can simply Google top 20 stocks by market capitalization in your country. And just look around the stock information sheets and charts. You can use Bloomberg or Yahoo Finance, among many others, to look up all this information. Investing into good performing and fair value companies in the top 20 is usually a pretty safe idea, and it's definitely a great way to start. And the last step is to start investing. But there are two things I really want you to keep in mind. The first one is to spread out your risk by investing into several companies at the same time. 5 to 10 feels like a good range to me. And the second thing is not to invest all your money at the same time. Spread out your investment timings, especially for the longer term. Even day traders don't put in everything all at once, but multiple times throughout the day. Since you're nowhere near a day trader just yet, then I suggest you to spread out your investment timing. The art and science of stock trading is an infinite world of knowledge, but everyone should start investing with these 5 simple steps. In future videos, I will go laser focused into all the small details I have talked about today. So make sure to like this video and subscribe to this channel to get notified for future videos. And as always, thank you so much for watching and peace out.